Good afternoon, Trader Tim from E-Money Mind here, doing a Monday market analysis video. It's June 24th, 2019. Today in the ES was kind of the second day of this bull flag, kind of right on top of the breakout or that prior high. Last week we had the FOMC meeting announcement. It's looking like they'll actually be cutting rates, or the chance that they'll cut rates uh, pretty high in July at the end of the month at their next meeting. That's a little bit certainly a little bit strange in a market that is making new highs. You know, the idea of cutting rates to incentivize people to switch from sort of conservative money markets, savings accounts, that sort of thing, to stocks um, when rates are low and you're only making a percent or a percent and a half on your money. Turning to the stock market seems like a better alternative. So, to be in a really hot stock market scenario, I mean, if I go to the weekly chart from the beginning of the year, I mean, just incredible growth for the S&P and the broad market, and reaching into new highs now. If we look at the 50% pullback that we had back at the kind of the low of the beginning of the month, or this recent pullback, I'm targeting 3,000, and then just a little beyond that, 3,058 is the negative 23. And so when you factor in the momentum that the market has, the likelihood to get a rate cut from the Fed, the strength that we've had just from this rally itself, summertime, I mean, there's a lot of reasons that folks might be in good spirits. It's looking like we should be able to reach that 3,000 level without too much resistance. I mean, there's certainly nothing to the left of the chart that would provide resistance. So the resistance that we would see would come in the form of, some sort of economic report or trade um, announcement, or maybe a turn against the possibility of agreements in some of the trade stuff that's going on here in the U.S. and globally. So technically, from a chart-based perspective, there's no resistance to the left, and we don't have a whole lot of shelves, if you will, or consolidation on this way up that would act as support on the way back down. But the prior highs is one spot that would act as support, and then this little 5-6 day sideways movement down at 2,900 is another area that could act as support. I don't have this 50% drawn up. That's down at 2850. That's certainly a ways down there, but that could act as support if we got a more serious pullback. Um, so at this point, things are looking good. Intraday, when we get that breakout to the next new high, it could very well be a serious, big body candle to the upside. And if it ends up being sort of the opposite of this um, sort of dragonfly doji here, then what you would see intraday is like a morning rally that would take you, super high into new highs, and then all of a sudden you get a nicey high tick at highs, and then a big sell off. So that's one of the things I'll be watching for on a strong up day, is a nicey tick that lines up with the high price of the day, preferably like a little bit later in the morning after we've had a big rally. But without any major resistance to the left, and folks being in pretty good spirits, taking summer holiday, volume's definitely a little bit lighter in the summer, um, but things are definitely treading well for the bulls. The only really broad market. We got the S&P, the Dow, the Nasdaq, and then that brings us to the Russell, which is showing some bearishness. It's definitely been the weakest one of the four, clearly not breaking its all-time high, and then the Nasdaq just barely at its high. So it's the Dow and the S&P that are sort of leading the way, and some of that weakness from the small caps and the tech um, could provide some resistance, but from a bigger picture standpoint, um, it doesn't really seem to be dragging the market down. It's sort of just lagging. So I'm not putting a whole lot of weight in the fact that the Russell's been heading a little bit lower here in the last 2 days. It is the only market that has had increasing volume on its pullback. When you look at the SPY, you've had the stronger volume on the way up and then lower volume on the way down. To the downside, you've got this 2-day sideways move here. And then if we kind of come in and look for a swing low, we don't really have one until back here, like an official swing low. But what we have are a couple of unfilled gaps down here. And so if we do trade lower, I would look for those gaps to be the target, especially like if you start trading into, if you broke the low from the 18th at 29.10 and a quarter, then it's very likely that you would come down and fill the gap very quickly, like typically that same day. So anytime I see us break a low that has an unfilled gap below it, then that's where you can target. And if that distance is, a decent amount, then using a sell stop below lows or getting in a short trade near lows is an okay move because you've got the potential to accelerate down. And the same thing goes for moving up into new highs without any resistance to the left. Taking along near highs as a way to get into a bigger trend for the day, especially if it's early, that's an okay move as well. So I'll be watching for those couple things this week. I've got this little retracement up here. If I go to the 30-minute chart, you can see it a little bit better. It's just the low from, what was that, Thursday to Friday's high. And right now we're holding that. If we come down and break the 61.8, come about 2/3 of the way back, I'm looking for, in the context here of a bull flag, I would want to see that day be a hammer. Like if we come down and break the 61.8, I would want us to rally into the close. And so sometimes you get 2 or 3 days of sideways movement and then you break up. But every once in a while, you'll get kind of a dip and it ends up being a fake out. So the low of this initial Dragonfly Doji or Hanging Man is 35.75. So that is about 15 points below where we're currently at. So I'm going to have my eye on that. And then as long as we're within like 69 down to a 29.50, you just want to be careful. Today was a super tight range sideways day. Friday was okay. But there's definitely a lot of potential to come if we, for when we break up or break down. So you don't need to overtrade the consolidation parts of like a bull flag. You get 4 or 5 days strong up, a little bit of a consolidation. If you can stay out of this chop and don't dig yourself a big hole, then the next leg up, it just becomes easy to get into those trades on trending days. So should be I'm looking forward to a good week. Next week we've got the 4th of July holiday here in the U.S., so it's going to be a shortened week. And a lot of folks go on holiday, and I'll be spending some time visiting family as well doing a little vacationing. So take advantage of things this week because next week is likely to be a little bit slower. So hopefully everyone has a great week out there. And if you want to tune in to the live trading room, that'll be happening Tuesday morning tomorrow. You can check that out, eminimine.com/VIP. Thanks and take care.